Hello, oracles. How's it going tonight? Man, markets are looking questionable. So hold on one second. I got some technical issues here. We're good. All right. Yeah. So market's selling off a little bit. AI or Nvidia had their earnings. Yeah, just got some things that are going on. Let me get this out of here. That guy. All right. And yeah, so that's kind of where we're at. Is just got some sell-offs. I'm going to go over the charts for today for Tesla, share a little bit of that with you guys. Again, I made the video for it the other day, kind of explaining why I thought we were going to move the way we're basically moving right now. So far I have been right. We will see if it continues to track that way. But yeah, so that's what's going on. What's going on, Alex? All is well. Just still busy, and every time I think that things at work are, getting back to normal for me, they keep asking me to go to other places and do stuff. So throw my schedule a little bit off. It's fine. Do what I got to do, but it definitely throws my schedule off a bit. So I'm trying to get back into a routine and just can't. And I was in South Carolina last week, so I apologize for not being on. I tried to, but just had some issues with internet Wi-Fi the night I was there trying to do it. There was no Wi-Fi, so I didn't have it until they moved me to another place the next day. So, but it's all good. And yeah, so just looking at the charts, and I'll get into it in a minute. Give you guys a couple minutes to get on here. And actually, I gotta bring it up. Where did it go? Man, everything. What's going on, Lang? Yeah, just busy working. Working's a good thing these days, especially with never know what's going on with the economy. Anytime you can be working is a great opportunity to invest, great opportunity to save money, get yourself prepared for the future. And let me see here. Apparently, my computer didn't update, and I lost everything that I had preset. Not a big deal. I have a kidney for sale if anybody needs one. It's funny. One of my friends on Facebook was talking about Tesla, of course, and Tesla getting down to the levels that it's at. And I was like, he's like, yeah, he's like, I'm looking to buy right now. And I'm like, it's like, hey, I'm not going to tell anybody what they should or shouldn't do when it comes to investing. You guys have to make your own decisions. But I just, I like to go out there and just, share my knowledge, basically what I do on here. And again, I'm never going to tell you guys on here what you should or shouldn't do with your investing. That's all completely up to you. But I like to share the things like the charts and just show you what I see in the charts. And man, where is nothing is what it should be. Okay, there we go. And and what I see, I share. And I share my knowledge and my insight. You guys do what you will with it. And I really hope that I'm not the only one you listen to. I hope you guys go out there and do your own research, see other people's opinions on things. It's very important to get different perspectives. So, what's going on, Sith Lord? Oh, Dean, hey, what's going on, Dean? Is your Tesla end of 2025 prediction still? Oh God, no. Oh, Dean, no, that has changed a while ago, and I know I haven't seen you on here in a while, so it's all good. Yeah, I haven't done price targets in a while. I am trying to do one. If my work schedule wasn't as crazy as it was, I would have probably had one out by now. But yeah, I haven't done price targets in a while. I stopped doing them for a little bit just because they truly don't mean anything. But you guys liked them, and they are fun to do. Plus, it's good for me to kind of do my own valuation on doing my own valuation model on it is important, just for any investor to do. So I will do that. As far as my end of this year prediction, I'll go over the charts right now where I think we're going to go. Timing of it's going to be a little bit off. I just because I don't know what's going on, but I'll give you in a little bit. I'll give you my price target for the end of this year, or at least a rough ballpark for it. Lang, I rearranged my portfolio, selling some and keeping my DCA buying. That's all it is. DCA historically has been the best way over the long term. To me, I kind of like to do a combination where I'll DCA, but it's kind of a DCA where I'm tracking my own portfolio and seeing what's up and what's down. So when I dollar cost average, I'm not just putting in, $100 or whatever it is spread evenly across everything. I see what stocks that I have sold off, and I'll add to those rather than the ones that have been running. You never know where the stock market's going to go tomorrow or anything, but for me, I just like to do it that way, and it gives me a better perspective and a better ability to buy lower things that are selling off. So instead of buying when things are running, I'm buying when things are selling off. So basically, be fearful when others are greedy, and greedy when others are fearful. When people are fearful and they're selling off, that's when I'm buying because my portfolio tells me so. How's everyone liking Trump's lowered egg prices? Well, we won't get too political today. We'll talk a little bit about tariffs and stuff like that, but yeah, we won't get into politics. I still keep yield max stocks. So what I did for my yield max, and I've only got 5. Well, BITO isn't yield max, but that's one of the 5 in my ultra yield plays. I hit $1,000 in each, and then I cut it off. So I have stopped adding to that. I'm adding to my other positions currently. I may add to them again in the future. The reason I don't want to add too much to it is they do have a lot of NAV erosion. So, realistically, over time, you're going to be losing money. Plus, the expense ratio is stupid high on them. So I kind of hit that $1,000, and I'm going to hold it right there. I'm just going to let nature take its course on those and let it be, and go from there. If we end up getting a massive pull down, maybe I'll see where they're at the bottom and maybe add them at the bottom. But for right now, I've stopped adding to those, and I'm just taking the income from those. Alex, $300 for Tesla is a psychological level that would be hard to get back over. Yeah, unless something fundamentally changes, waiting for 250 gap to fill before nibbling. Yeah, and that's it. Breaking these psychological levels, and again, we'll take a look at the charts, and you'll see, we're basically reversing course right where we're at, and that's really it. So, can you address what you think of the political Musk implications on Tesla? Yes, actually, I will. That was one of the things I was going to go over, and I'll do that right now, and that's. A lot of people, what we are finding is, yes, there's going to be some people who aren't going to buy Teslas now because of what Elon is doing. So be it. No big deal. We've had that basically before as well. The bigger concern right now, at least from that political standpoint, is there's a lot of people out there, and I don't know if you guys saw on the news today, someone who apparently went to a Tesla dealership and was like, I don't know if it was destroying vehicles or setting up explosive devices, whatever it was. There's a lot of people out there who are so, not right in the head, and they're going out there, and anybody who owns a Tesla, they're damaging vehicles, getting mad at the person, and that's deterring people who, someone like me who is like, hey, I really don't care either way politically, but there's going to be people who are like that who are going to go buy a Tesla because politics don't matter to them, but they're deterring themselves from doing it because other people who have politics that do matter to them are now coming out and possibly going to be damaging this car. And I'm like, well, politics aside, I don't care. I was going to buy the car, but I don't want to buy a car that's now going to make me a target. And that's really the issue I think that a lot of people are seeing right now, and it's compounded. The major issue that's going on right now is just the whole entire automotive industry. I'll put it back up. The whole entire automotive industry right now is going to be facing some challenges this year. Higher interest rates for longer. That's going to be the challenge. Basically the same challenges that Tesla and the automotive industry faced over the last year and a half is still going to continue going forward this year. The Model Q is going to come out, but it's not going to be as low a price as people think. We may or may not lose the EV tax credit. That could be an issue for Tesla as well. We may have FSD and robotaxis rolling out from the Tesla fleet in Austin in June. But don't forget, that's just rolling out then. Then you're going to have the issue of, well, now that's not people being able to utilize their vehicle as a robotaxi yet. It's a great step forward for Tesla, but because consumers can't use it yet, it's not like it's going to drive up FSD revenue either. So we have to wait for that to end up happening. By the time that happens, it could be next year before we end up actually seeing that. So this year, I think, is still going to be a challenge for Tesla from a fundamental basis. I think it's going to be, as Elon said himself, kind of building the structure. We've got the foundation built. We're now going to be building the structure. But that's kind of what this year is all about. So we're not going to be seeing anything massive like running the company forward yet. That could be 2026, 2027, 2028. That's kind of where we're going to end up seeing it. But having this political stuff on top of that is just adding that extra layer of challenge. And I think that's the problem that we're facing right now. So again, I do think it's going to be more near-term issues. I think long-term, again, when we're looking out, 2 years from now, when we're looking at the end of 2026 into 2027, shouldn't be an issue by that time. But in the near term, in the next 12 months, maybe 18 months, it's going to be an issue. Uh, Tesla will fall some more boycotts, Tesla cars in EU and US. Yeah, that's really it. There's going to be Tesla. I think is going to come down again. We'll look at the charts in a minute when I'm going done with the comments right here. But yeah, but we're going to come down. That's my prediction. Is we're going to come down. My dad. Hey, Dad, how's it going? Yeah, my dad. Hope your arm is feeling good. I'm glad to see you're able to type. So that's awesome. Some backlash in California with people selling Teslas and looking for other vehicles. Yeah, that's it. And of course, California being a more left leaning state, that's it. That's what you're going to see. And then they're going after Cybertrucks. They're actually attacking it. I guess Massachusetts, I think there was somebody who had the same thing happen. And that's really it is, people are going after these people for political reasons when maybe the people who own the vehicles don't care about politics, but now they're becoming targets and people aren't going to want that, especially if you've got a family. You really don't want to put your family in harm's way because of the vehicle you bought. It's so silly that it's even happening, but it's reality. So more and more brands of China EVs are selling in the OZ states. They're getting cheaper and cheaper. Yeah, that's the other thing too is, looking at China, that their Tesla really doesn't have any competition anywhere in the world other than China. And China competition is real. And as Troy Tesla was pointing out the other day, I can't remember which company it is, but they've got basically their Tesla competitor vehicle coming out in June or July of this year. So that's going to take another chunk out of Tesla's market share over in China. So that's going to be another concern for Tesla when it comes to sales this year. Troy Tesla is actually predicting another decline. So we technically saw a decline last year. It was basically flat, but it was a decline year over year. And he's predicting another one for this year for a multitude of reasons, which I had just mentioned. So again, when you've got a growth company with a PE ratio of about 150, actually, I think it's 138 right now. When you're looking at a PE ratio of that and a company that's not growing, that's a problem. And you're basically in a bubble right now with a company that's not growing currently. Not to say it's not going to be growing, but it's not growing currently, at least from the EV standpoint. Yes, energy is growing. Yes, we have FSD coming. Yes, we have Optimus coming, but EVs right now are the meat and potatoes of the company, and they are not growing them. So that's a problem. Stagnation coming, stagflation. Yeah. So stagflation is a concern. A lot of people have been talking about that. Whether it's actually going to happen, I don't know. But we'll see how that's going to play out. And again, that's kind of where we're at market wide. So Tesla having their own challenges that they're facing individually, on top of an economy that supposedly looks good with the market hitting all-time highs, but consumer sentiment is at all-time lows. Kind of leads me to believe that the entire market's going to be pulling back, and Tesla will pull back even more on top of that. Dad only need one finger. Which finger is that? Yeah, Baba X Peng, yeah, Baidu, yeah. I'll go higher. So the Chinese stock market too is another one, and I'm not one to dabble in it just because of the uncertainty over there. But thinking about here in the U.S., when was the last, other than COVID, prior to COVID, when was the last amazing buying opportunity we had? Yes, there was some in 2018, but the best one we had was going to be back at the great financial crisis when our housing market crashed. It was an amazing buying time, horrible time for many, many people. But as far as actually investing in the stock market, that was one of the best times in the last 15 years. China is going through that right now. That's the important part. And that's why people are looking at China as a place to invest, because basically you don't have to worry about our economy doing poorly. You can use our economy's strength right now to invest in a weak economy like China right now. So that's what a lot of these big name investors are doing. To me, it's just because it's uncertain. I don't know China can do anything because it's not the same as we have here in the US. So I stay away. But it could be a great opportunity. And some people are doing that. So Yeah, recession fears are resurfacing. Not excited about it. Fed might have to cut sooner than later. Only two cuts forecasted in 25. Yeah, yeah. Right now, there's only two cuts forecast. Was six when we started the year, which is a big reason why we ended up selling off a lot like we did. And recession fears, like for some people, it never went away. The problem is you end up getting people who are, just kind of riding with the bull. Like, hey, the market's going up, it must continue to go up. I've always talked about it on this channel. I haven't stopped. I still think we're going to get a recession, whether it's next year. Seems like the recession, just because of the fact that both Trump and Jerome Powell do not want a recession. Now, don't forget, Jerome Powell is in charge of the Fed until I think next May, and looks like he's going to stick around. He's not going to leave. Trump is not going to boot him. So that's it. And Jerome Powell doesn't want to have his legacy end on a recession. So he'll do whatever he needs to do to make sure we don't get into a recession. And Trump, especially within his first year, doesn't want to get into a recession either. So we have two very important people making sure we don't get into a recession. Sometimes kicking the can down the road can actually make it worse when we do get there. But right now, it's probably looking at maybe 2026 for a recession. And that could be it. And maybe the cause is, we've got consumer debt at all-time highs and it keeps on climbing. So maybe we end up getting to the point where they kick the can down the road till Jerome Powell leaves. Then when we get a change of power coming in with the Fed, that's when we end up getting to the point where the market's like, all right, now we have uncertainty because we don't know who's in charge of the Fed anymore. And that uncertainty on its own could be enough to kind of spark a recession. So that's why for me, I'm still holding cash, and I actually changed my strategy for the next year. I was going to be staying at 12.5% cash, but I've got two more steps to go through right now in my next phase. Once I get through that, I'm going to end up putting myself up to 15% cash and just kind of wait and see what's going on with the market. I stopped adding to my super high yield plays strictly because of the fact that if the market's going to be pulling back, I'm just going to let those kind of add cash and then see where it goes. And as the market pulls back, I'll add more to my longer term plays that I want because I'll get those at better prices. And then I'll utilize the cash coming in from the higher yield stuff to be able to add into those. But yeah, that's kind of where I'm looking at the next 12 to 18 months. Is the recession, I think, is still coming. I think it just got pushed off a little bit. Yeah, too much chaos. No, don't treat this like any regular pullback. Yeah, there's so much. And again, I've talked about it before when it comes to the fear and greed index. I actually looked at it. I thought it was December. It was actually end of November was the last time we were actually in greed territory. Since then, we've been coming down. We fell down into neutral and then fell down into fear, bounced back up to neutral. We've been bouncing back and forth between extreme fear, and neutral for the last 3 months. We have not been in greed since the end of November. So I think right now, despite the market in that time still hitting all-time highs, don't forget the market is being driven significantly by the Magnificent Seven. Even with Tesla pulling back, that's it. So if you start to get a lot of those tech companies selling off like we've been seeing recently, that's going to drag the entire market down because those are so heavily weighted. And so that's one of the things you got to pay attention to. And let me jump up here. And the tariffs. When we're talking about the tariffs are going to bring prices up. Trump has said it himself. Tariffs are naturally going to do that. Obviously, the plan is to put the tariffs in place to be able to get manufacturing back in the U.S. And he'll supposed to be doing some incentives to have more manufacturing here in the U.S. He spoke with Tim Cook. Tim Cook said he's going to invest $500 billion in U.S. manufacturing. I mean, that's a lot. So we'll see if that actually comes to fruition or if Tim Cook is just saying that to appease Trump. I don't know, but the tariffs will do that. And as Trump has said, it's more of a balance. When you're looking at places like I think it was Taiwan, no, not Taiwan, Vietnam, I think it was. There's a 33% tariff over there. So this is where the trade wars are going. Is when we try to sell something to them, there's a 33% tariff on it, but vice versa, there's nothing. And all Trump wants to do is basically balance that off and say, hey, let's just trade equally, instead of having everything get favored outside of us. And that's basically where it's at right now. And that's what his plan is. Whether it actually plays out that way is a totally different question. But that's what the strategy is. But in the near term, it will cause inflation to go up. Warren Buffett, tons of cash on hand. Yeah, and one of the things to look at when you're looking at Warren Buffett, and obviously, comparing us to Warren Buffett's, not wise because we're not Warren Buffett or have that kind of money, but it's a totally different situation. Us with smaller dollar amounts, being invested in the market or having cash on the sidelines doesn't matter a lot. I mean, yes, having that cash to take advantage of opportunities will be good, especially if you can catch it at the lower end. And as we go on forward after that, should be good. But the reason Warren Buffett does it is because he's got a lot of companies that are out there right now that, he doesn't see opportunities that are out there. It's not like he's looking to, build up his portfolio. Obviously, look at how big it is. It's enormous, but he's got to pay insurance on a lot of other companies. And there's just so much uncertainty. So he's just holding that cash to kind of keep it on the sidelines for an opportunity that comes up. I mean, he can realistically, with that kind of cash, buy nearly any company he wants. So that's kind of what he's doing. So for us to do that, I mean, still historically, you look back, dollar cost averaging is still going to net you better. I just keep the cash and cash flow coming in because it speeds up the process for sure. But yeah, but when Warren Buffett has held the cash like he is right now, he has not predicted the market, but shortly after he has built up his cash position to levels that it's at right now, we've seen a market crash afterwards. So he obviously can't predict the future. He doesn't know. He just sees things. He doesn't see opportunities. When he doesn't see opportunities, that typically means that there's a bit of froth in the market, and you go from there. I find it amazing that as much as the administration is anti-China, those are the only stocks going up. Yeah, I know. But they may also be going up only because of the fact that, it's like a 2009 scenario going on over there where everything is screaming deal prices. It really couldn't go much lower. Could be that case also. I almost bought calls on TSLA. Yeah, when Tesla couldn't get back over 300 yesterday. Shoulda, woulda, coulda. Yeah. I still think it's going to come down. I'll pop up the charts now and show you guys what I see. Let's see here. All right. Make it that. Beautiful. All right. So, as I've been saying, look at this dead cat bounce. We've been bouncing and bouncing and bouncing down. This was the closest we had to possibly coming up, and it was kind of a fake out breakout, and we've just been plummeting. And again, looking at the gaps here, and we have this gap down here to 255, and look we're right at the top of it. So 275 is where that gap starts. And again, I think that's coming up next. Now, we are at an RSI of 25. So with an RSI of 25, that's oversold. Not to say it has to come back up right now, but maybe before we fill this gap, we pop up a little bit. But again, when you're reading charts like this in the near term, you look at this here to see if you're trying to find a trend reversal. Clearly right now, we are on a downtrend. And now, in order to get that reversal, as I talked about here, you need to make higher highs and higher lows. We started to do that and then faked out. So I want to see that happen 3 times in a row. And then we can say, all right, we've begun our uptrend. So if we end up bouncing back up from here, we'd have to look all the way back up here to this $360 level. If we can bounce back up and make a higher high above that, then we can start paying attention to the lows that we make and then highs after that. But that is a significant turnaround that we would need to make, especially with everything that's going on in the macro environment and everything that's going on with Tesla specifically. That would be a massive turnaround that we need to make in order to reverse this trend. I do not think that's going to happen. Again, we may bounce back up a little bit from here. Again, at 280, we may come back up. And as Alex said, we may test that $300 mark as that psychological level. And then my next thing to look at would be, all right, are we closing above $300? I've got a bunch of old levels on here. That 313 level was a big, hard one to cross before. It was a very, very strong resistance and support level. So we broke right through it without an issue coming back down. Now we've got to break through 300 and then break through 313 again. But again, you look at, and I called it before, This 218 was a nice reaction to the Model Q coming out, but that's what it was. It was a reaction to the Model Q. That's strictly what this was. This here and this whole entire move was a reaction to the election. Now we are retracing all of those steps, coming back down. And so closing that 255 gap is going to erase all of the just the emotional reaction to the election. That was it. And we're just cleaning that up. Then the next thing we have to look at is, all right, well, where's the Model Q? Model Q is supposed to be coming out first half of this year. Chances are it's really going to be second half. And then we have to worry about EV tax credits and if it's actually going to be what they say it's going to be and what the excitement was all about. So that's when we look at this 218 level. All right, when the Model Q comes out, is it actually what people were expecting behind this jump right here? If it's not, we will fill this gap back down here and come back down to the levels that we saw right before Q3 earnings. That's the way I'm looking at the chart. So this is how I look at charts, and this is how I look at why things moved the way they did and why it reacted the way it did, and all the reasons why we could or could not see it go higher or lower. And as much flack as I got for some of this, I was spot on. So, I just kind of tell you guys what I see and happen to be right this time around. Well, it was weird. They just completely shut off. But yeah, so Karav, what's going on, my friend? How's school? How are you doing? Haven't talked to you in a long time. Let me see. Yeah, Alex, Palantir. I trimmed some Palantir at 113, still holding a massive amount. Though my cover calls will print some, though $60 incoming. Yeah. And I said the same thing. $60 was my fallback price on Palantir. I still think it's going to fall much lower than that. Actually, I'll bring up, and I don't know why the charts went away entirely, but I'll pop that back up. It was just very strange. Let's see here. Where's Palantir on my list? Maybe it's further down. Right now, Palantir. All these updates. Oh, there it is. Yeah, so looking at Palantir, and I mean, Palantir is just a mess of enthusiasm, and still their RSI is still only at 40. So don't be fooled and think that they're going to bounce up from here. I mean, I still think they're coming down further. Looking at all the gaps that they have, looking at this giant gap here, this giant one here just filled. So again, that was another one that I had called. We've got a gap down at 58, gap at 51, gap at 42. And, with all of the insider selling that was going on last year, people are like, oh, well, if they were so bullish on the company and excited, why were they selling? Even Alex Karp was selling. So it's like, what was all that selling going on? And I haven't looked into it. So I don't know if it was just stock options and stuff, but still, you don't have to cash those in, or you don't have to sell them. You can cash them and just hold them. But they still sold them. So that was, my thoughts there. And there's just so many gaps, 31, 24, 20. And again, like the $20 up to 24, I think this was legitimate. And I think this here was just that massive sell-off August 5th. That's what I thought. So August 5th, huge sell-off, and it just gapped up with the rest of the market at this point here. So realistically, I could see it coming down to 30. I mean, look at the PE on this, 450 for a PE. That's absolutely insane. So in order to get back down to realistic levels, dropping at 10x to a 45, even if it's growing significantly, let's double it to a 90. So you drop it by a 5x, dropping the stock price by a 5x, you're looking at, 20, wow, math hard right now, even if it's, $20. So $20 is almost a realistic price right now. So that would come down here and fill this gap at $20.99. So when you're looking at realistic intrinsic values of companies and you're looking at PE ratios and all that and their growth trajectories, $20, I can definitely see $20 be a potential, especially if we're going to get into a recession. I could definitely see that as a potential coming for Palantir. So $60 is great, but I don't know, if we'll get down below 60. But man, I think it is extremely expensive. One of the guys I work with just talked to me about sold off Lockheed Martin and ended up picking up Palantir. No, again, I think they're both great, the defense contracts, but hearing about how they're cutting the defense budget, Palantir shouldn't see a hit from that, but you never know. So just knowing that information, and I think he bought it like the 120 level. I was like, oh, dude, it's like you might be kicking yourself for that one. Again, you look out 5-10 years, I think Palantir is going to be fine, and I think you're going to go up, but that's a long time to wait. Just thinking about Tesla over the last couple of years and why I ended up selling out a significant chunk of my Tesla position was because I don't want to have that sideways money for that long when I could be making significantly more money elsewhere and building up my portfolio that way, and then still having opportunities to still get back in to Tesla when the price is lower. I mean, my cost basis is under $200 for Tesla. So I'm looking at 218, and looking at my portfolio, 218 brings me right down to the level where I could buy another share, and it puts me right to where I want to be. So that's just my thoughts on this huge bubble that we saw. It's basically like the election euphoria bubble. Let me see. I feel Tesla will try to test 300 one more time before free falling. Yeah, and I agree with you. I think that's what we're going to end up seeing. Palantir is in the hundreds now. Well, Karav, it was in the hundreds for a very short time. Now it's back well under 100. So, yeah, I didn't think that over 100 was going to be long lived for Palantir. I ended up selling. I sold a share at 120, almost at the peak. Actually, it was 123 that it sold out at. But it was only one share because I like the company. My cost basis is $19, so I made $100 on one share. But I'll still hold it. Maybe I should sell more Tesla around 280. Hey, I'm not going to tell anybody what they should do or not do, but 100% will hit 200, have my buy order. Nice. And that's actually something very smart to do. My dad and I used to do that. And it was one of the things that he taught me was if you like something at a certain price, put in a buy order. And I'm working, so I can't follow the market all the time. So I don't know especially if there's big moves one way or the other, especially early in the morning. When you have that massive market move, you could sometimes get a huge sell-off and then a reversal. So, it could be a good buying opportunity there. And I miss it because I'm at work. But if there's a price that I like something at, I would set in a buy order. Or if you're into playing options, you can, do a put. And this way, it's basically the same thing. You're getting paid to set that target to hit and buy. If it doesn't hit, it doesn't hit. But, it's one of those things where you like it at $200, put it in. And sometimes we play around too is because that psychological level at 200, that's kind of that level that it may get really close and just not actually hit it. So if you hit it right at $200 exactly, it may not trigger. But, what's a $1 difference? Maybe you do like 201.23 or whatever it is, and you make an odd number and play and have fun with it. But, a $1 difference isn't going to make or break the bank, but it could end up making that difference between it actually triggering and buying for you or not. And that's just the way I've always played it, is that way is I'll go a little bit above it. I give that little bit of padding in there just because, sometimes the market knows. People who follow the market, hedge funds, things like that, they can see things that we can't see. They can see what all of our buy orders are. So they see a whole bunch of buy orders down there at $200. They're going to drive that stock price down. They're not going to stop it at 200. They're going to stop it above 200. This way, nobody can buy in at those levels. And then they wait and see how people react to that. So if you go right above that, then you can actually maybe get triggered. Buying a TSLQ? No, no TSLQ for me. That's just not in my wheelhouse. I'm sticking away from that one. I'm actually more in the consolidation phase of my portfolio right now. I've sold everything that I've wanted to sell. So unless something goes awry with one of my positions, which it really shouldn't, but if something goes awry with it, then I'll move out of that. Otherwise, I'm just kind of in accumulation mode right now, and just letting my portfolio build over the next couple of years, or if things change. Krav, pretty good token physics midterm. Awesome. Got an A. Well, I mean, I would expect you to get an A. You're awesome, Krav. Also got accepted to the top 5 computer engineering program in the US. Amazing. Congratulations, Krav. That is awesome. And I have been well. Very very busy with things around with work. Got a lot of stuff going on, but all positive things. Something I had actually made a comment to yesterday with one of my coworkers, just sharing some wisdom he was asking me about. And I'm facing some challenges. I've got had my boiler guy come out yesterday. It needs some updates. It's an old boiler. It's fine. It's basically like having 100,000 mile update for your car or something. So nothing horrible. Just needs some updates. And while we're down there, I noticed the pipe was leaking coming from some pipe in the upstairs bathroom. So I've got to call into a plumber to come out and take a look at it. So a couple of issues that I could be concerned about, and I am. But I look back and I was like, well, everybody has struggles. Whether you're super poor and you're living on the streets, or you're a billionaire, everybody has struggles. It all comes down to what are the quality of your struggles, and are the quality of your struggles improving? So, you go back 10 years, I was struggling to find a place to live. I was struggling to, buy enough food for myself. And that was a struggle that I faced 10 years ago. Now I'm at a place where the struggles I'm facing are I need to get my boiler updated and I need to get a plumber out here to fix a leak. Like, it's because I own a house. That's an awesome struggle to have considering where I was. And it's all about that perspective. So, so that's kind of where I'm at. Is my struggles have improved, and I'm happy about that. And I'm glad to reflect upon improving struggles. Alex, to be holding Palantir right now, you have to have a long term time horizon for sure, and a strong belief in management and the fundamentals. And that's it. And I think their commercial side of their business is going to boom and overtake the government side of the business. And I think they're going to be awesome. And you've seen a lot of their commercial customers very pleased with their business and their results. So I think that is going to grow, but still at these prices, I still wouldn't buy it. Definitely not a buyer. I won't sell anymore. I'm a holder at these levels, and I'll see if it dips under 60. I might buy one share, but I mean, with a cost basis of $19, I have no reason to buy any shares of Palantir anytime soon. Let me see. Karav, I haven't been in stocks much, but I sold in the 400s, and I'm glad. Wow, good for you selling in the 400s. That was, I mean, so many people, I talked to, and Peggy's one of my absolute favorites, but he's such a Tesla bull, but he's got that super long term outlook, which I think is awesome, and he's going to be perfectly fine in the long term. But he's got that mentality of Tesla's immune to all political stuff. They're immune to anything else. And he just has that vision. And I think it's an awesome vision to have, especially as a long-term investor, is he sees where the company will be in 10 years. And I think that's a reality that we are going to see in 10 years. But in the meantime, there's a lot of other things that are going to be going on. And there's explanations as to why the stock price is moving the way it's moving, as I just went over. And that's it. So, I love Peggy's perspective on things. And it keeps me from being, it keeps me balanced. So when I kind of feel a little too bearish on the company, somebody like Peggy reminds me of what the future potential is. And it's great to have that perspective. I'm at work too, but stocks come first. I mean, don't get me wrong. I'm on my phone every once in a while, checking my portfolio here and there when I can. But for me, I don't want to be in a situation where, I'm too busy playing around on my phone, and then I lose my job because they see that I'm, not working, and then I don't have any money to put into the stock market. Then I have to sell out my positions in order to pay for stuff. So I got to be careful with that. If you think the stock will be at the same price 1 year from now, there is no reason to own now. Find something else and come back to it. Exactly. And that's basically what I did with my Tesla position. Was I saw that it was going to struggle for a couple of years. And I was like, well, hey, I think I'm going to have a better opportunity to buy later, or the same opportunity. So why would I sit here on it, when I have an opportunity to make some money elsewhere? And if you guys didn't see it, I did a full breakdown video on, taking the money that I took, and if I had put it all into Tesla and just, doing basically an all-in scenario with all of my money into Tesla, and where I would be at versus what I did with my portfolio and my money, buying the house and switching over to dividend stocks. And when you look at it at the time at $450, I looked like an idiot. Now, looking at Tesla stock at $280, I look brilliant. And I said the exact same thing in my video. Let's look at this 3 months from now. And it was even less than 3 months. So you look at that. I mean, it's now 2 months basically since we hit the high in mid-December. 2 months later, and here we are, and I'm looking smart again. So it's have that long-term mentality versus short-term mentality, and just understand what the difference is. Yes, it should always be family first. My dad's right. Family first always. So when you're only comparing work and stocks, work first. But at the end of the day, in real life, all the time, family first, always. My struggle a few years ago was living paycheck to paycheck until my daughter was born. Never again. The best part of our of communities like this is a real growing together, own individual journeys. Yeah, I love it, man. I love that, Alex. And that was the same thing. I was paycheck to paycheck until basically 4 or 5 years ago, right before COVID hit. I was paycheck to paycheck, paying off massive debt, and then I got promoted. I took my money, and I was just wise with my money. I've been paying down my debt, and I just took large sums of money and just paid it all off, and got myself completely out of debt. And that was the huge turning point for me, was just that. And I went from my struggles of paycheck to paycheck and having to pay down debt to now my struggle is, man, I only have $75 a week that I could put into the stock market, because now I have to put money towards a house and a mortgage and windows that I got for the house. But the other struggle, or the positive that I have when it comes to the boiler and my the plumbing issue is I have money coming in from my tenant, and I have money on the side that I put aside, especially for my emergency fund. I have money there. So it's not like I have to go into credit card debt to pay for these things. I have the money, and I could just use the money. And instead of, the struggle I have now is, instead of being able to take the money that I had coming in to be able to put it into the stock market, I take that money and I have to pay for things to fix the house. That's a good problem to have. And I set myself up for that intentionally. And that's where I'm kind of at, is, that's my struggles, and I like it. Let me see. I'm going to jump off in a couple minutes here. It's been a long week, but what else do we have going on? Let me see. We talked about the tariffs. We talked about Nvidia. So that's the other thing too, is Nvidia's earnings. They beat, but Nvidia's earnings expectations were so high, and you guys remember when Tesla would beat their earnings, but because they didn't beat by enough, because there was those whisper numbers, and you saw a little bit of a sell off afterwards, and Tesla would sell off almost every single time they beat earnings. Well, that's kind of what we saw with Nvidia. They did go up, but then they ended up selling off. And again, with Nvidia being the second highest market cap in the S&P 500 or in the country, you have them sell off, it drags down entire index funds. There's a lot of index funds that have Nvidia and the entire Mag 7 in them. So that comes down on its own. It brings down all these index funds. You have these index funds coming down. It's going to drag down all these other stocks. You have all these other stocks coming down, and people who just are protecting themselves, they have stop losses in, stop losses start getting triggered. Those start getting triggered, and it just domino effects down and triggers more that are down below and more that are down below. Then people start to get scared. And they're like, oh man, we're in a market crash. I need to sell out before we fall even further. They sell out, causes it to fall even further. More stops get triggered. That's how this downward spiral happens. Tesla was one of the top market caps as well. Now we've cut off, what are we, almost, over a third. I mean, since the peak, what are we at here? So down from 480 to 280. So 200 divided by 480. And we're down 41% from peak on Tesla. That's massive bear territory. It's huge. So down 41%, from where we are, that's pulling down the entire market as well. And then you start seeing Nvidia start to fall, and Microsoft has been pulling back a little bit. So, that's just pay attention. And again, you see the dead cat bounce, and it seems exciting. And I can't remember who it was. Maybe it was the Market Hustle I had seen, showing that even during 2008 and 2009, there was a lot of like 5 and 7% bumps up in the S&P 500 over that time. But the entire market ended up falling 52% over 2 years. But you still saw a bunch of 5 and 7% rallies. So just don't be fooled by a little short-term rally. If you want to use that rally as an opportunity to maybe take some profits, just understand how the market is moving and why it's moving before you sell anything. Because don't forget, you don't you don't recognize the gains or losses until you sell. So if you're coming down and you've taken and you're already at a loss, do you want to sell and realize that loss? Or do you want to just dollar cost average into it if you like the stock long term and just lower your cost basis? That's a decision you have to make for yourself. Um, so, oh, there it is. Yeah. 39.3 billion. Wall Street wanted 40 billion in revenue. So this is the other thing I look at too. When I look at things like that, and you're trying to value a company and value the growth of the company and where it's going to be going from here, it's one of those things where is the company growing, period. And you look at, you know, whether Wall Street had expectations of whatever it is or not. Again, that's not something even a Warren Buffett's going to look at when he's valuing a company. He looks at, what's the management doing? Do they have a moat? Things like that. But when you're looking at a company's financials, is the company growing its free cash flow year over year? Is the company growing its revenues? Is the company growing its bottom line year over year? If the company is consistently growing that, then it's a good company. Even if it's not meeting Wall Street's expectations, it doesn't mean it's not a good company. It just means that the expectations that were put on it, or a PE ratio that was expected for it to maintain, was not being maintained. So it's going to sell off down to those new expectation levels. Simple as that. So, and it goes in the other direction as well, especially when the market's pulling back. That's why you can, sometimes see those opportunities to buy, or a lot of it can come from sentiment. You see sentiment move the stock one way or another, despite the fact that they do have growing bottom line cash flows and revenues. That's one of those prime opportunities to buy. And we saw that with Tesla in the past, where the company was growing great, but there was a lot of sentiment that pulled it down below where it could have been selling at. And you see those great buying opportunities. Yeah, and then my dad's right with the margin calls. If market keeps falling, the margin calls are met by selling your good stocks. So margin calls, and yeah, so people are getting margin called on like Palantirs. If people had margin on that and they had options, now they're getting margin called on Palantir. All right, but they probably have gains. I would imagine they probably have, Nvidias of the world, and they've got some other stocks that are out there as well. And Nvidia is probably one of them, because a lot of the investors in Palantir have Nvidia. Now all of a sudden they're getting margin called. Oh shoot, they need to come up with money. Well, Nvidia, I have massive profits on. I'm going to take my profits in Nvidia and pay off my margin call there. So that's a good point too, Dad, because that's another reason that could pull the market down. Yeah, and then exactly, Lang, more falling margin calls, and then again, as we pull down, now some people maybe have Nvidia on margin. Cool. Nvidia starts to fall, margin calls trigger there. Now what are they going to sell? They're going to have to sell something else. Then maybe some people are selling for losses because they need to just come up with the money from anywhere. Look at cryptocurrency. Bitcoin just got slaughtered. Completely getting destroyed, cryptocurrency right now. And that could be another thing too, is people are selling out of crypto because that's run massively. And again, a lot of those same investors are in cryptocurrency like Palantir and Nvidia. You sell off all this Bitcoin to cover those margins. And then all of a sudden, Bitcoin starts to sell off as we've been seeing it. So it's just a lot of that, one thing affects another situation. Yeah, there you go. Exactly. Margin calls in the BTC price action too. Wonder how the leveraged people are. Yeah. And, it's something that I had been talking about. Margin is not a place you want to be, especially in this market. Yeah, you can argue that the last 2 years were a giant boom and you would have been doing great. But man, you never know. This market is way too uncertain to jump into margin. If I would never do margin, but if you were ever going to do margin, this isn't financial advice, but just realistically, you wait till the market hits that bottom, like the end of 2022 when everybody knew it was completely beat down. If you want to get into margin there, and even then do it very short term, and never ever go into margin for more than you can afford. Oh man, I just don't even recommend it. As my dad says, moral, don't use margin. That's it. You can margin creates a scenario where you can lose more than you even have, and that's a major problem. That's bad. Crowd Costco earnings calls next Tuesday and Wednesday. Yeah, Costco. I'm a shareholder of Costco, not much. I don't even have a full share of Costco, but I love the company. I love the fact that they pay out special dividends every once in a while. You usually always pay a premium for Costco because of that. But hey, I'll take it. It's a small position. It's one of my actually. I'll see if I can bring it up for you guys here, and then I'm going to jump off. But I'll show you what I got. And share. Oh, I got to do it that way. There we go. All right. I'll show you where I'm at here. All right. Yeah, so my positions here. So like I said, I hit my limit that I want for all of these, and again, they keep on falling. So Coney, Tesla, AMZ, these are my ultra yields. These here just taking a beating, but I'm not going to add to them because as they fall, I could just be adding all of my money to this and just be losing it. This here is strictly bringing in $250 a month. That's cool. These are the higher yield ones. These I like a lot more. XDTE is good. It's one of those weekly pairs, but like the QQQI, SPYI, JEPQ, and JEPI, these four I really like, especially going into uncertain times, because the volatility will cause them to bring in higher income. That we saw that in 2022 with JEPI. So I think the potential of these, even if it loses its value itself, the income generation could go up. So I keep those because I want that cash flow coming in. But as I get these, I have stopped adding to these as well. So I'm only going to be adding to these as we go down. And these are my REITs, BDCs, and MLPs. So these here, I'll continue adding to because long term, these are the ones that I want to have as my high yield cash flow generators. These are my long-term lower yield, but dividend growth companies. And then VU, of course, is just, that broad market to give me the exposure to everything. And then these are the companies that I've decided to stick with right now. I don't plan on selling any of them unless there's something that comes up, but kind of dabbling in basically the top 10s and adding a little bit extra on top of what I get from VU. And a lot of it's because of the fact that they have such crazy high dividend growth. So like looking at some of them, like the dividend growth on pretty much everything I have is going to be over 10%. This is 1 year, but even the 10-year is over 10% for most of them. Meta just raised theirs by 5%. Google is their dividend increase should come in June if they choose to do that. And the only three that are under it are Starbucks, Procter & Gamble, and Home Depot, but those are kind of my recession-proof hedges. So they still have great dividend growth at 7%, but they've got higher yields at 2.5 to 2.75% here. So higher yields, plus they usually hold up much better during recessionary times. And then down here, I've got my Tesla, Amazon, SoFi, and Palantir. And again, these have all been taking a beating along with my cryptocurrency. So you can see the higher growth plays that do not pay dividends. I have a lot of money to add to them because they've been taking a beating lately. And I have intentionally not added to them because I saw that beating coming. So I just held on. But yeah, that's kind of where I'm at right now, is just watching those things and just adding to my positions. Let me see. Yeah, I have Tesla, Nvidia, Coney, Misty. Yeah, Misty. I mean, depending on what price you bought into Misty, that was the biggest one that was out there. Coney for me was awesome. Coney can go to zero, and I would still be profitable on it. Tesla, I have a ways to go to break even on that because I sold previously, and it did bounce back up. So, I mean, I wouldn't say I timed it wrong. I just, I should have just held on to it anyway. I changed my strategy. It happens. Nobody's perfect. Nvidia I stayed away from because I felt it was in a bit of a bubble, or Nvidia was in a bit of a bubble, and I thought it was going to sell off. Similar to Tesla, with Tesla being in a little bit of a bubble, I minimized how much I added to that, and just kind of riding it out now. But yeah, Coney I did very, very well on. And again, if you follow cryptocurrency at all and the way it moves in the community, historically, we've seen it go up like it did, and then you kind of see the correction like we've seen right now. And then historically, what happens next is you get like the smaller coins, like the sheebs, which haven't moved a ton, those end up taking off afterwards. Whether that's going to happen or not this time around, I don't know. But historically, that's kind of what we have seen. And then you see the massive full crash after all of that. But it's usually about a 2-year run. So we're basically in through 1 year of it. We would see another year of it pushing up. You would see the altcoins really pushing up and skyrocketing from there. And then you see everything pull back significantly. So whether it's going to happen or not, I don't know. I'm just continuing to follow my portfolio as it is. Have a great night, Alex. Thanks for coming on. And speaking of that, I'm going to jump off now. It's been about an hour. I've got to get myself ready for bed. But as always, love hanging out with you guys. This is phenomenal. Hopefully should be back on schedule for Thursdays going forward, but I'll keep you guys posted on that. But otherwise, have a great night, guys. Smart investing. Stay with it, and I'll see you guys later. Have a great one.